So welcome everyone. Good evening. Thank you for joining us. Today is Wednesday for another of Learn, Grow, Invest's reviews, stock reviews of itself, company reviews. So as we bring this to order, everybody would have seen the disclaimer a bit earlier on. So everything that's going to be discussed today, as you know, is for educational purposes, and it's not to be taken as financial advice. We're not financial advisors. So we have a very, very, I would say it's an interesting review or exciting. Actually, that's the word I would choose to use. Exciting review of Jamaica teas. But as is customary, before we start, we always begin with a word of prayer, and we're going to do this now. So, Lord, we just want to give you thanks today for bringing us together again in fellowship, in discussion, for the persons that are out there who are watching this review. We thank them for their interest. We wish the best for them and their investing endeavors, and we hope that the information that we impart to them educates them to become more successful investors in terms of making decisions based on the education given that are more fulsome and more analytical for them to understand what they are investing into. All these things we ask in your precious name, amen. All right. So, as we do this review today, as I said, it's the review of Jamaica teas. I'm going to share my screen for us. One moment. So we're basically going to break this down. Well, let me actually tell you how we're going to do this. We're basically going to break down who is Jamaica Teas. Basically, we're going to do a review of the company. We're going to look at who their potential competition is, the industry that they perform in. We're going to focus a little bit more heavily on the financials of itself. You guys know that that's normally my area of expertise. Jermaine is the qualitative, I am more the quantitative, but we're doing both today. But I've done some good work, or I believe I've done some good work for the company financials that have been done up to the point. We're going to also then look on the price of the company in terms of what it's trading at now and what kind of volume it does. And we're going to then take a look at some of the the news that has been spoken about in the company and so forth, and things that we are aware of. Right. So with that being said, we can get right into it of who is Jamaica Teas. All right. So who is Jamaica Teas? Well, basically, as it's said in the company here, let me see if I can make this a little bigger so you can all see. It says that for their story, right, Jamaica Teas was founded in 1967. It initially produced only black tea under the Tetley brand, as well as providing contract manufacturing arrangements. Today, with over 40 different types of teas, the company is the largest producer of teas in the Caribbean, with almost one half its products exported to other Caribbean markets, and North America. Teas are also produced on a contract basis for a number of other Caribbean companies. So one of the first things we always look on when we're analyzing the company, we try to identify what makes the company money. So as we can see, this is who Jam Teas or Jamaica Teas, as being called, is. Now, their brands, they have basically 3 brands. Those 3 brands are Tetley Jamaica, Caribbean Dreams, and then they have a distribution that is actually broken up into global and local. All right. So as we know, Tetley Jamaica, everybody has basically seen, if you've gone into supermarket, etc., you've seen Tetley teas. And then we have the Caribbean Dreams section, or array of products that they offer. And then they have, as it's stated, they have their distribution section, which is their global distribution. And as I was looking through this, they're actually pretty well spread out. And this is something I like to see about a company, actually. They're not hard-coded to just Jamaica. So they've spread their market, their risk, etc. So they're in multiple countries in the Caribbean, as you can see as I'm scrolling through here. And then we have them in the United States, in Florida and in Texas. In Europe, they're in the United Kingdom, right? So that's pretty much where they are, who they are, their brand, and what they're divided in for their distribution section with respect to their global distribution. Now, when we get to the local distribution side, you can find their products in these various major retailers and wholesalers. So pretty sure some of us have gone in there, the Shoppers Delight, the Shushan, etc. They are in each of those, your high-low food stores, etc. So that's their distribution, both global and local. Then additionally, even though their main arm is teas, that's what they do, and they've got subgroups of other brands and so forth, they have other divisions as well too. So they also have a real estate division and they have a retail division. So on the real estate division, that is run by the company that they have part the ownership in, HMO Food and Sons, and they currently have two, at least on this page, there are two real estate buildings that are, well, one completion or should be completed. Yes, it would have been completed already, sold out, and another one that is supposed to have been completed within 2020. I'm not too sure if it is, but that's there for their real estate arm. And then we have, again, this is their retail section. Now everybody knows that with the whole pandemic and so forth, most of the companies that can, when with respect to their products, they've gone online and doing delivery services, etc. So it's good to see that Jamaica Teas, in terms of this, has actually pivoted. So they have their Shoppers Delight, which is you can shop online for their products that they have. So with that being said, you have a pretty good idea of who the company is, how they generate revenue from just eyeballing the things that they're into and where they are basically, right? So looking at the company's competitors now, if we were to look at that, we would find that they fall in the industry. They are in the manufacturing sector. That's the first thing. And their competitors, some of the popular ones, they're on the junior market, and some of the popular ones that are on the junior market that we would expect they would be competing with are like Elasco Manufacturing. I believe it's a lot of foods, but I might be wrong about that. So let me just double check because I had it here earlier on. 1 second for me. On the manufacturing section, what section do they fall under for that? So for Jamaica Teas, their competitors in the junior market would be Lasco Manufacturing would be their primary competitor in the junior market. When you go on the main market, you'd have companies such as Wasinco, Salada Foods. Those would have been the main ones, and Separate. In terms of in line with the kind of products that are being sold, I would assume or expect that's who you would place their competition with, right? So thereafter, now that we've identified competition and industry, we've done the overview of the company, so we know how they generate revenue. We can get straight into the nitty-gritty of what makes this company tick in terms of how they have performed. So normally, at this point, we would normally bring up their company financials. But as you know how I like to do it, I normally go full force into doing a nice analysis of the company. So I'm just drilling through the tabs that I had open. So this was their annual report for 2020. Now, something you should note, Jamaica Teas does not have a current report for annual report, and that's because they're a bit delayed. It's supposed to actually come out, the report is supposed to come out tomorrow, they said. So they have they only have up to 2020. However, they do have their quarterly. So their quarterly report actually went all the way up to Q4. By right, technically, I mean, it's unaudited, so you have to take this with a grain of salt. They're unaudited fourth quarter, which is basically a full year. It's a full 12 months. So you can actually use that, as I said, again, with a grain of salt as a comparison or in your analysis of the company, basically, of what they have done for the particular year in question, which is 2021. Let me just take a look and see if they have, and this, by the way, guys, is the new JSE site. So we're taking a look on where we would find this, and we will be finding it under the, well, here's the company. So basically, the companies are normally found under the trading section of. So for those who don't know or haven't seen the new JSE site, right? When you go on it, this is what it looks like now. And if you're looking for your companies to do any reviews on them, you will go into the trading section, and then you can go down to scroll down the page, and you get to the instrument lookup. Now, at this point in time, we'd actually have to know what, well, either have the company's name or have the company's ticker. So it's JAMT. And here it is. This is the company. Now we see that apparently they had some, this looks like a bond, right? That was back in the day. And then we can get to the company of itself. We'll get back to this in a second. So let's see what we have. We have audited financials. In the summary section, we have the audited financials, annual reports, quarterly financials. Let's see what is in the audited financial section. And as you can see, they did an announcement to tell us that the 2021 audited financials were delayed. And as I said, it's supposed to be out tomorrow, because based on this circular, I believe that was said that, on or before the 29th of January. So it's either coming out, forgive me, it's coming out sometime between now and the end of the week, basically. Or when is the 29th? That's correct. Between now and Saturday, this should be out, right? And I found this very interesting, and we'll go into it a little bit more in detail in the financials when we look on it, because taking attention to the fact of how COVID has adversely affected or impacted their staff resources and the work, because it's going to show up in their financials. It shows up in their 2020 financials for sure, right? And we're also going to see how it shows up as well in their unaudited Q4 financials. So let me start with my sheet. 1 second. I need to just do a share here. And the one that I want to share is this. Let me make sure that you guys can see this good enough. All right, I'm going to make this a bit bigger, as it might be. Let's see. All right, this looks big enough. Right. So company financials for JAMTs. You know how I like to do this. So pretty much this is JAMTs in a nutshell, year on year. And I did their review from 2012 all the way up to 2020. The standard things that we know about JAMTs, I mean, everybody that knows the balance sheet. We've done multiple videos about this part, about how to review financial statements. Please take the time, if you don't remember them or need to brush up on it, to go through the various line items that you would see in the financial statements. But basically, the things that we're looking at in a nutshell or in general, we're looking at the assets of the company versus the liabilities of the company. And the difference between that is the equity, right? And we also have some ratios that I like to look at in terms of their debt, in terms of how they cover their debt, etc. And that requires that we look on the liabilities more so, because liabilities are the total liabilities, that's the debt of the company. So pretty much, as I was looking on Jamaica Teas for the years gone from 2012, right? I like to focus on individually. I like to focus on the company. I personally believe it's normally stated that when you do a comparison of ratios, such as these, you should really be comparing it against another their peer, right? Their competition. But I like to believe, based on the thresholds that I set, if the company can't stand on its own 2 feet based on some thresholds that I've set, I've already got some red flags. So for me personally, I have my own set thresholds, and then I can compare them to their competition. So taking a look at Jamaica Teas, one of the very important things in terms of performance about the company is their debt to various types of item points, ratios, etc. So the first one I have is their debt to asset ratio in terms of how much debt makes up their assets, right? And then there's their debt to equity, there's their debt to capital. Capital being the capital formula is simply their total assets from their current liabilities, right? So pretty much, I like to basically look to see how those ratios stack up based on my thresholds. So this is 2012. Scroll forward, and I have my color codings. For those of you who know my analysis, it's pretty straightforward. 3 simple things happen. Based on my threshold, it's either going to be blue, which is something I like, red, which is something that I don't like, and yellow, which is something that is cautionary. So for the 2019-2020 period, remember this is for the financial year of what was given, because we do not have the financial year for 2021 as yet. We basically have Jamaica Teas doing fairly okay on, out of these 4 ratios, they're 3 out of 4, right? So give them what? That's 90%, 3 out of 4, in terms of being in a good setup. Um, the cash ratio is basically how much cash the company is holding. You won't really expect a company like Jamaica Teas to be holding a lot of cash. They should be deploying their cash. Sorry. So they should be deploying their cash, basically putting it to work. So it's expected that their cash ratio would be a red number because the cash is deployed. However, you would expect things like their quick ratio. And what is that looking at? That is looking at the difference of their inventories from their current liabilities, basically, right? Or sorry, apologies. It's your current assets from your inventories, and you're dividing that by the current liabilities, basically. And that gives a ratio. Now the threshold that I'm using it's positive for me. Additionally, their current ratio as well too is also positive. But what I like to do is basically go one step further. When we're done with that, seeing the numbers is one part. Seeing it on a graph is a different picture altogether as well too. And with debt to asset and debt to equity ratio, you want to see a downward trend. And that's what they've been in from since 2012, right? They've kept it steady, making sure that their debt is covered pretty nicely. So as you can see, this is financial leverage. The charts for the company in the right areas. I'm going to show these 3 are supposed to be trending downward. They all are. Then we have things such as how capital is being employed, or how when they generate money, or they put the money to work, that is going up. We have a comparison of their equity or shareholders' equity. That is basically, if you and I are invested in the company, what is allocated to us should the company decide to wind up and go and dissolve and go away and pay us out, right? We see that their equity is firmly above their debt, above their total debt. So I like to see things like this. So for me, this is where you know it shines for me of the company. This is the quantitative side of it, right? So as I said, fairly on the balance sheet side of the company, looks fairly good. Now let's get to the part of the income statement and the cash flow. Cash flow is the most important statement for me personally. Why is that so? Because the cash flow statement shows money going in, money coming out. The income statement is going to show you all the niceties that you guys hear on the market being talked about. Oh, company made X amount of net profit, or the company made X amount of revenue, or their revenue growth was X percentage, 2 times or 3 times, etc. I like to dig down into the nitty gritty of what I don't call it, I don't want to use the word fluff, but what is the catchy pieces, the flashing lights that says, look at me, and get down into, okay, yes, you made X amount of net profit, but how did that net profit do for me in terms of how much how much was really made, in terms of how much was generated in revenue, and then at the same time, then from that revenue, how much was net profit. Now I have a thing about companies, as long as I understand the company, that is, I have a thing about companies that make a lot of revenue, and then when it gets to the net profit, it's minuscule, like it's tiny, you barely get anything. So for that being said, funnily enough, about Jamaica Teas of itself, this line here that you should be seeing, let's make sure, yeah, you're going to be seeing, that's the net profit line. Net income to shareholders, that's what that NSH stands for. So we basically see that 2020 had our net profit, and remember I said pay attention to the COVID line that says they were impacted. When COVID basically started, the height of it was in 2020. You notice that they were on a roll for their net income to the shareholders, and also for their net profit in general. They were really going up very nicely, right? There's 2019. 2019 was pretty much their best year, and then COVID, and then they had negative net profits, right? But in terms of their overall operations with respect to what they gave, or this, they didn't have negative net profit, they had negative net income, right? But with respect to what was available to the shareholders, they basically still had 223 million, which is less than the 395 million that they had in 2019. We're gonna correlate that in short order to the current unaudited financials that are there. And as I said, you take the unaudited financials with a grain of salt, because it hasn't been vetted by the auditors themselves in terms of the firm that they've hired. So yeah, you just have to wait for that. But I mean, still, not discounting the fact of what this company does year on year, you see solid growth in net income, right? It's just an outlier and sad that COVID came along, because who knows, it more than likely would have been that 2020 might have been an even better year, but you just have to take it as it is. Does this mean that the company is not good? That's something for you to decide, because now you have to dig in to see what the company has done to basically shore up the situation of what they were undertaking, right? The things that they were doing, and how they can ensure that if this, God forbid, ever happens again, they will not have the same thing where they lose their income like that. So we'll see how the revenue goes. Because the funniest thing about this is, or the interesting thing is, that when it comes to their revenue, I'm gonna come down to that line, which is sales and revenue right here. You will actually see that their sales revenue continue to improve. So what really took out all of that money? What really took out all of the money was the operating expenses, and basically the cost of doing, and the cost of the revenue being generated, right? So that's really where they got completely hit, right? So we'll see. Let me bring it back up. Let's tie that back into the actual. I'm gonna tie it in to the company financials. Sorry, 1 second. So let's tie that back into the company financials for the particular year. And I have that open. Here we go. So 2020. Make it a bit bigger. So this is the company's income statement. 2020, $2.1 billion. Basically call this 2.2, round it off. And then a whopping 1.6 billion needed for revenue, for generating that revenue. And then we go down to how the money just started to be removed. So we've got $297 million for admin expenses. Then we've got what do we have? We have the admin expenses. We've got fair value losses here. Now this is normally attributed to like their foreign exchange. And if you notice, for those who are new to this, it's very important to read these little numbers, which is for the notes, because it gives you great insight to how this number came about and how it impacted the particular part of the financial statement you're looking at. So this is a removal of $482 million based on losses. And you can basically check the notes 3H to see what that was exactly. But in the grand scheme of things, what it did was they had a gross profit of 584 million, and then this just took it out, leaving them with 181 when they got some additional income. More than likely, this would have been coming from a subsidiary, etc. Or we check the note again, and that's what they got. That's basically after the gross profit. You take that out, and then you have the administration expenses that need to come out. It's called SG&A, selling, general, and administration expenses. And that ended up, this is your operating. This is basically coming down here. You're either going to have an operating profit or an operating loss. And as you can see, brackets means negative. So they had an operating loss. So that tells you all it needs to tell you about what happened to them for COVID, pretty much. Because subsequent year, 2019, this was a positive number. COVID, negative. And it just transpired further down into what happened with the company by the time we got to the part of what is payable to, but not what is payable to you, but what kind of profit they took in for that year. Negative, right? But based on everything, based on the fact that they had their retained earnings from before and carried over, they still had money. So when they deducted that, you still ended up with, this is the part that is money attributed to you as a shareholder. You still had $222 million dollars, that could give you a dividend if they were to pay a dividend, etc. Giving you, and this is the share price, obviously the earnings per share, as we like to look on. Now I choose to look on the diluted earnings per share because that's a combination of not just the shares that are out in the market, but also the shares that the company has given to their employees, etc., and so forth. Diluted is all the shares together that is being tallied up. So that diluted earnings per share was 30 cents, a drop from 54 cents. So that's basically they lost what, that's 24, basically a difference of 24 cents shaved off between the 2019 to the 2020 period, right? Now, as I said, the last thing that I like to look on is the cash flow statement. So let's jump back over to that quickly. And I'm going to show you why I still have a liking and a confidence for the company of itself, just because the income statement might have been a block for 2020, but their cash flow is still strong. So this stuff up here, this section here, you have your cash flow from operations, a whopping $1 billion. This is what they actually were able to generate in cash from operations, right? When you take away, and this is a crude calculation, when you remove what is called their capital expenditure, this word is capex, and what really that is, it encompasses things such as their property, plant, and equipment. You get what is called their cash flow or free cash flow. And their free cash flow was still $1 billion. Now, for me, this is an important figure. Why is this an important figure? Because free cash flow, and especially more importantly, free cash flow in comparison to sales, is the amount of money that the company can extract from it every year without having to dip into their retained earnings, without having to undertake debt, etc. They are solid with their free cash flow, and as such, with respect to their free cash flow to sales, which is the next item here, which basically pits free cash flow against sales, they have a solid figure of 46%. Now, this threshold that I use, and I want to make note of it, the threshold that I use for free cash flow is actually just 15%, right? And actually, no, correction, 5%, right? And this company is doing 46. So for me personally, the whole issue of the net profit going to negative and so forth is a blip. Let's see what happens after COVID. Let's see what happens in their current financials when it comes out. So we can take, and I said we'll do a little check on their financials for the unaudited. Let's see what it looks like. If they were able to change course and change trajectory. So this is the quarter unaudited Q4, right? So basically, as I said, this is 12 months, right? What happened? Let's see what they said. Well, they said that the total revenues for the quarter declined again, 262 million by 262 million from 787 to 525, right? 248 million of this downturn resulted from the sale of 12 of the studios at Manor Park Complex in the year ago quarter versus no real estate sales this quarter, and the remaining 14 million mainly reflects lower export sales that was partly offset by an increase in domestic sales in the manufacturing process business. These things are very important to read about the company. You need to know how the company generates revenue, and you need to pay keen attention. You also need to pay keen attention to the expenses of the company. So on the expenses side, they said that the changes in the cost of sales for the quarter and the full year largely matched the changes in revenue. However, during the quarter, there was a significant deterioration in the gross profit margin. That's one of the important numbers, but I actually like to look on the operating profit margin more. Why is that so? Because it takes into account as well all of the expenses about the company, right? And how they're managing their expenses, managing all those administrative expenses and fees, etc. Right? So if they're already saying that their gross profit margin got hit, you know that their operating profit margin must have gotten hit as well too. So I mean, as we go down, that's the expenses. It tells you curtail activity in some of our overseas markets accounted for the reduction in sales costs due to COVID-19 related travel restrictions. So again, until the company identifies how it can get around the impact of COVID-19 to them and to their operations, you can genuinely think that their operations will continue to be impacted. But let's see. Let's go down into the financials and see what happened. And guys, you can take a read of the document. It's right there. You'll find it under the section quarterly financials. Right? So you just go into that section and it will have, I think I have it up already as well too. Here it is, quarterly financial sections. This is it right here. This is the last report. So we go down into the section and we see what they did. So I need to get this good so that everybody can see. This is their revenue, and this is for the fourth quarter. So we see again, compared to 2019, 2020, impact, right? And we also see year to date. Well, you actually see that the revenue has grown, right? For the entire. So the fourth quarter is just is basically taking in the change of what happened in the last 3 months for the financial year. And then this is the full financial year that they've put out. So this is unaudited. This was compared to their audited financials. Now, when the auditors get through with it, we'll get a credible audited figure, right? So here we have it. For now, it says they made more money than last year again. But once again, their cost of making that revenue went up, right? So there's an increase there. As such, gross profit is impacted. As such, at least they generated other income, which was this is fairly about double, right? So yeah, this is good. And instead of having a fair value loss like what happened last year, they claim that there is a fair value gain. So profit before expenses, which is basically the total, well, gross profit plus others, is now standing at, as their claim is, $1 billion. That is massive in comparison to the 181 million that it was standing at for their audited of 2019, right? Or should I say the 2019-2020 period, right? Then we go down to the SG&A, which is the sales costs, selling general and administration expenses. And as we go down further, we see that their operating profit has moved from a negative number to now a positive. So as this clearly shows you, without fully understanding the qualitative side of the company, that they've done something to right the ship of that negative factor that happened to them last year, right? And now they're on the positive. So positive operating profit. Let's see what their net profit is claiming. So this is their profit before tax, after their tax is taken out. And here we have the comprehensive profit. This should be their net profit. And the claim is that something or thereabout, at least it's a positive number. That's better than what happened last year. So a positive number, and as such, we are looking at a positive figure for diluted earnings per share in terms of going back up again, and that's on the income. That's on the income statement. Quickly going down to the, well, we have the balance sheet of itself, but I won't go over that one because I would prefer to be looking at it for the entire year and it being audited. But just eyeballing it, you can clearly see that their statement is for equity, which is the final figure here. In terms of equity, assets minus liabilities, equity has clearly grown, or at least that's what they're stating. So when it gets audited, we'll see, and that's very good growth, right? 3.3 billion plus versus 2.8 billion, right? And then we go down to the part that I really care about the most, which is cash flow. And cash flow for their operations. Now, this went negative. That's their net cash. But we do have, where in terms of their actual operating cash flow, before we take out what is called their working capital, it's a little bit low, but still, it's still up there. So I'm thinking that at the end of this all, when we get down to it, we should have positive cash flow. And yes, we do, but it's severely reduced in comparison to the year before. Still positive though. As I said, remember that cash flow at the end of the day, and more so free cash flow, which is operations against capital expenditure divided by sales, free cash flow to sales. As long as that's still a very positive threshold or above, at least for me, as I said, I use 5%. So if it's still high, I'm still having confidence in how I feel about the company. Other niceties though to take note of. There are some notes up here. Their outlook is very important because it's going to tell you what, on the qualitative side, how they feel about things going on, coming up for the company. Will the company have headwinds or tailwinds? So their outlook says that the Jamaican economy is showing good signs of recovery from the declines in 2020, with a turnaround in tourism industry and continued growth in the remittances, increased production and exports of alumina, and reduction in unemployment. The group has finally received planning approval for a major expansion of the manufacturing plant to meet and prepare for continued growth, and construction is expected to commence in 2022. So now we can look forward to this expansion being done in 2022, and thereafter in the years, realizing more efficiency from the company, etc., going forward, into into 2023 and onward, right? So that's basically it for the company financials of itself, and what that is saying. So where are we at with Jamaica Teas of itself in terms of price? Um, so price today, at least it's stating that the company's price was $4.10. Now, I normally like candlestick charts, but let's leave it at the line chart. So for the last 3 months, they've been pretty flat relatively, but they've had decent volume traded for the most. So if that's your thing, I am a long-term investor. Everybody knows that about me, who know when I do analysis. So for me, I'm not really caring about this like that unless I'm planning to exit the company if I own it. And fair disclaimer, I do not own Jamaica Teas. At least I don't own them anymore. I did years ago, and that was in my early years when I didn't really understand. But I haven't put them back into my portfolio. So fair disclaimer, I don't own them, but I'm still looking at it saying this is still favorable. And with everything that is happening with the company, expect that earnings will start to well, I would expect, I should say, earnings starts to influence sentiment at some point in time, right? So $4.10 and it's trending upward. That's the claim, but it's been flat for the last 3 months. Is the trend up or is it flat? Now for that, you'd have to actually zoom out. When we go year to date, it's flat. And when we go 1 year, well, it came down a little bit. But I mean, for those of you who trade, if that's what you look at, you can see that genuinely it looks like the trend is going back up. The price is started to gradually pick back up. So, give it time. And there's decent volume that gets, well, actually, it won't be decent volume. Let's see. Well, yeah, there is decent volume that is traded throughout the days, as we can see. So pretty much it works for the traders, I guess, as well too, right? Moving on from there, what news do they have? Well, for those who don't know and those who would know, the biggest news that they have is that they plan to spin off one of those companies. The company that they plan to spin off is the Caribbean Dreams arm of the company. Like they plan to do that now. I'm trying to remember when they said they wanted to do it. Was it supposed to be in summer? Caribbean Dreams. Oh, let's see if I can just get it right. Search. Right. So for me, this was the news that I remembered. This is their biggest news. And another big one was that they actually appointed. Now I'm made to understand that the appointment of Mrs. Blake Bennett as GM, as CEO, sorry, for their manufacturing division is huge because she's coming from Salada, which, as I said, that would be a former competitor. That would be the competitor or I would assume them being a competitor, right? So they were able to get that talent, and this company is planning to come to the market as a spin-off of itself, right? And it's going to come to market. Let's see, I think it was in summer that they were planning to do this. Let me see if there was a statement. Let's see. Besides, I'm going through, and it doesn't say. But I think they were planning to come in. They were looking to do this in summer. Don't quote me. But we'll know when we know, right? So yeah, there you have it. Basically, of the latest news for Jamaica Teas in terms of what's going on. But let's see if there's anything else I was stated. So the latest news. See what loads. No, we just have share dealings. That is there. And this was the announcement of the new CEO. There's nothing really that new, basically. That is going on. But these things you also need to pay attention to, because this could be like maybe a director selling shares or buying shares. Yes, see, it tells you who sold shares, how much they sold, etc. So those little snippets are very important as well too. It shows the confidence. At least I would like to think it shows the confidence of the directors and etc. The stakeholders that are running the company. Their confidence in the company or otherwise. I mean, some people don't think so, but I would like to. Especially when there's things on the horizon, because remember they're doing the work. So you know, um, so yeah, with that, let me see, and I think that's about it for all of the various things about Jamaica Teas and who they are, what they do, how they look financially, etc., and what we could look forward to them from them in the future. All right. So with that being said, I am going to basically give some time to take some questions. Take about 2 questions. All right. So the first question is, what percentage of the company's revenue does the real estate component contribute to? Good question. Normally, to find that out now, you're going to need to look on the. So let's see if we can find it in the audited finance. No, I won't want to use that. I would actually like to use the full financial year. So this is 2020. We need to look down and see the makeup of the revenue. So let me see if we can quickly find that. So gross operating revenue, note 21. Let's see the breakdown. Note 21. As I genuinely have not done a percentage of it, but we can kind of eyeball it quickly and see what we're looking at. So you asked for the, it was for the company's revenue in terms of real estate component. So what do we have? We have that the real estate sales and property rentals. This is minuscule, technically, because check it here. This is in the millions. $254 million. This is a total of 2.15. Let's see if we can do a quick calculation here. So it's what's this? I'm gonna say $2.2 billion. Or should I say, sorry, wrong way. 254 million. 254 440. Divide that by 2, and is that 2.2 billion? 2.2 billion. Basically 11%, right? 11.6%. So in the grand scheme of things, not much, pretty much. So we can get the next question. Retained earnings. Do we have retained earnings on here? Yes, we do have retained earnings. Well, I don't have retained earnings I have it on the document. And I also have retained earnings in my sheet. So specifically, Xavier, what do we need to know about retained earnings? What do we want to know specifically about retained earnings though? Because, I mean, as we can see, retained earnings is if you point it to basically payouts for shareholders, or being able to advance the company without having to undertake debt. That's where the money has to be coming from, right? That is how I understand it. So what exactly we're looking about for retained earnings? So that would be what I would ask first. But let's take a look on how retained earnings did actually, just quickly. Let's see how retained earnings did. Let's see how retained earnings did based on what they say. So retained earnings, everyone, is found in the statement of change in equity, which is this one right here. And your retained earnings section is here. And the retained earnings for the period, again, this is unaudited. Retained earnings for the period, they claim, is 1.8 billion. I'm going to round this up, right? 1.8 billion versus what it was the previous year. It was 1.4 billion. So it has grown by basically $4 billion. Call it that much. I don't want to know. It's a little bit less than 400 million. Apologies, $400 million, because it has basically grown by. So yeah, and as you can see, they have not paid. Well, there's an interesting thing about Jamaica Teas that I have noticed. And I'd have loved David Rose to be here. So I've noticed Jamaica Teas doesn't pay a dividend per se. They pay what is called capital distribution. But they didn't actually do so they did it, yes, they did it for their 2020 period, and they did it for their 2021 period. in terms of capital distribution. Normally, if they had paid a dividend of itself, you would see it under retained earnings. But capital distribution comes out, from what I was reading, capital distribution comes out before we get to the point of the taxes, etc., and so forth. So, yeah. Also, not speaking. Okay, so you're saying not speaking specifically to Jamaica Teas, but you'd effectively like to know how much money were they bringing into the next year and why, and what are we putting that into? I think that's a little bit about me. I'd have to go and really look that up to see. So in terms of that, but you're saying it's not specific to Jamaica Teas. All right, you mean not specific to the Jamaica Teas operation, or the operation on a whole, like everything that is there coming in from them? Ah, okay. Okay, well, if it's coming from this, but like we don't know. Well, we'd have to look. We'd have to look on what that company does in terms of how that company, and we saw it. We won't see it here, or will we see it here? 1 second. Well, we do have revenue, but we need to look on how it's not said for the company of itself. It's not broken up. There was note 21, right? So note 21 does not actually break down the Caribbean Dreams. At least I didn't see it. I'd have to look for it specifically. Caribbean. No, it's not there. I'm typing it and I'm not seeing it. So it doesn't break down specifically what the contribution of Caribbean Dreams is to revenue that is being generated. So again, as I said, they don't pay dividends as we know it. They pay a capital distribution, and they paid one for the 2021 period. As I said, I showed it in the statement, in the audited right here, in the statement of changes in equity. There was a capital distribution payment that was done. The question I have about this, and that's, as I said, why I want David, I would love to have had David to just talk on this, is does this have to go to the shareholders, or can it just go to the persons that are the, what you call, the non-controlling interests that you saw up here, right? Pretty much. You would actually see it in the cash flow statement. If I bring it down, it's in the cash flow. It's normally under the cash flow from financing when they make payouts. But as you can see, it's not here. So you'll have to really wait until the audited financials for the year comes out. How do we determine that about this or other companies and beyond that? Well, that would mean that we actually have to compare that company to other companies as well. At least how I'm understanding it is, and if potential, okay, so, and determine if investors are potentially being denied potential returns, if the money is being, well, I can't say. Well, credible use. What do you deem credible use? Credible use is supposed to be that the company is out there working to generate revenue to get profit for the shareholders, right? So as I said, I see that they pay their capital distribution, and when you look on the payments in the news for Jamties, when you look in the news section, there's a section that I had up for dividend payments or payments in general. They have see this is a declaration of dividend that was here in 2020. When you look on the system, it says it's paid as a capital distribution. Now notice this was August 13, 2020. But then when you're looking for the same declaration for the 2021 period of itself, that falls in this quarter, that was on this part. Well, right, this would have been in operations. You notice the capital distribution, and you're not seeing, at least this is how I'm understanding it, I'm not seeing that figure, for that. So not sure. I'm a bit off with that one, so I guess I have to brush up on that. I will have to brush up on that, So yeah. Anyway, So with that being said, thanks for the questions. And as you can see, if you have any additional questions, please feel free to post them under the video. And also definitely please join our various groups, multiple groups that we have. We have our Telegram group, Facebook, we have our Twitter, on Twitter. You can message us, and we'll gladly answer your questions. There's, this is what we do. We want to make sure that our knowledge, as we learn, we all learn together so that we can invest better. So, again, and also please remember to like this video. And if you haven't subscribed as yet to our channel, please do. Right? It helps us to basically have a wider reach, wider viewer base, so that our mission of giving financial literacy to everyone basically comes to fruition, basically. Right? All right. So with that being said, thank you everyone for spending this time. Whatever you didn't understand, or maybe you weren't clear, or you want a review, please do a review of the video, see where you might have missed, and again, as I said, post those questions under the video for any clarity you need, or any new questions that you might find when you start to dig through the company's operations, financials, etc. All right. So thanks everyone for joining, and you guys have a wonderful evening.